Hey guys, I will not be using the what's good calling anymore until we hear better news out of Ukraine, so let's jump right into it. Today I'm gonna have a look at Intel and whether or not it makes sense to buy from a fundamental point of view at these levels, what's the intrinsic value as calculated with the DCF, and see if we can make sense out of doing the wheel strategy on Intel. Guys, before we jump in, please subscribe if you enjoyed the content. If you want to support the channel, please have a look below. There's my Patreon there. For just $5 you can not only support me but also make sure that you have prime access to premium content and timely updates with everything I do. So let's jump into it, guys. I'm gonna open up Webull and we can start. So is Intel at a good time to buy right now, guys? Well, when in doubt, zoom out. You know how it goes. And if we zoom out here, the picture becomes crystal clear. I mean, I really don't want to call anybody names, but you kind of have to be a monkey not to see the pattern here. We definitely have a very strong support line over here right at roughly $45-46, and this has been a support line, guys, for no less than roughly 4 years. This is uncanny. It's really rare to see 4 years, guys. And I mean, Intel has been making so much progress from just a fundamental point of view throughout these 4 years. So many things have changed, including God needing semiconductors more than ever now. The pandemic unfortunately shone such a bright light on the shortage of semiconductors that everybody has been talking about it for ages, so I really don't understand how come Intel isn't doing a lot better than it currently is, especially since the US will obviously want to make sure that they are able to source more and more of the semiconductors from an internal source, especially with all of the different wars and just political issues that have been happening throughout the past few years, guys. So that aside, for me, Intel here is a huge buy. Let's look at what the DCF tells us. And lo and behold, guys, it's gonna be exactly the same situation. So actually a 10-year model on Intel tells us that its intrinsic value is $93. 93. That's a 50% discount from where it should be from an intrinsic value point of view. And guys, if you want access to my DCF, this is included in what you get for those $5 a month. I cover so many stocks, it's ridiculous. So just subscribe into my Patreon if you want access to this, and I'm more than happy to share it. I also want to have a quick look with you guys at the PE ratio intrinsic value over here, which tells us that we're roughly at $53 of worth of intrinsic value from a PE ratio point of view. That makes it a 10% discount, guys. So yeah, pretty good time to buy into Intel. Let's see if we can get a deal, right? So if we have a look at Intel on the daily, guys, we can see again the fact that this $45 support range here has been holding strong, almost as strong as Ukrainians, honestly. So let's have a look at some puts here. If we go out roughly 45 days, you guys know that theta is really ramping up 30 to 45 days out, so let's aim for that. And we're gonna look at selling a put, guys. And actually, if we go have a look at roughly a 0.3 delta put, we can see that it's exactly the $45 one that we can buy into with a lot of trust, knowing that this has been a support line for so long. And yeah, honestly speaking, guys, I'm just gonna do exactly that. This is not financial advice. Please do your own research, but I think that the $45 strike price here for Intel makes a lot of sense. So let's have a look at the math. If we are to sell a put at the $45 range, what would this mean for your account? First off, please make sure that you never ever sell naked puts ever, guys, or calls for that matter. If you want to do those types of strategy that are more risky and naked, please go for bull put spreads or bear call spreads. Do not ever sell naked calls or naked puts. It just causes so much risk to your account. It's insane. It doesn't make sense. So if we are to do this, guys, let's say we're gonna take $1.05. It's 100 shares, so it's gonna be $105 that go directly into our account the second this trade is complete. And let's fast forward a month and a half. It's now the 14th of April. What happens if Intel stock is at or below $45? If it's 45.01, it doesn't matter anymore. You have made $105, you can move on with your life. If it's below $45 per share, you're gonna get put these shares. That's what it's called, guys. So what happens when you get put the shares? You're gonna basically have $4,500 get pulled from your account, and you're now gonna have 100 shares of Intel. Now, have you bought them at $4,500? Well, no, not exactly, because you've already made 105 on those same shares. So you basically now have them at $43.95. That means that every single share you own has an entry price of $43.95. Now let's try to fast forward even further and see a scenario where we're already selling a covered calls on those shares. And guys, you know, this is where it becomes a bit tricky. So as we were talking, we are now owning those shares on Intel at $43.95. Actually, in all honesty, let's say that the stock hasn't fallen as far as 43. Let's say it's 44, flat 44, right? And with that in mind, I'm now gonna go ahead and sell a covered call. Now, this is where it gets a bit tricky because we don't really know what this is gonna look like in terms of delta, and that's where it really gets a bit tricky. But let's just say we're gonna sell out again roughly 45 days out from where we're selling, guys, and we're gonna go with, let's say, $50. Again, I would have really wanted to see deltas here as well for a more accurate pinpointing of what we're gonna do. Actually, let's say that we're doing $47.50. So for $47.50, guys, we're gonna make another $218 into our portfolio immediately as soon as we sell this covered call option. And what would this mean? Basically, if we fast forward again a month and a half, and then the strike price of Intel, or basically the price per share of Intel is $47.50, we're gonna get called those 100 shares away. Now we have already received the $218, guys. We've already received the $105 from selling the put. So basically this means that we're gonna be able to make a total of $573, guys, on this wheel strategy. So what did we do? We sold the put, we got put the shares, we sold the covered call, we got called away those shares, and we now hold $573, guys. It's 2.5 months later, and we were able to generate 12, almost 13% on our $4,500 initial investment, guys. 12.73% means basically what the S&P and the Nasdaq average in the usual average year, guys, and you were able to generate this in just 2.5 months. Just imagine being able to roughly 13% every single 2.5 month iterations throughout the year. That would mean annualized gains of roughly 65%, guys. You would totally annihilate the market. I hope you're seeing some value in this video and really seeing how just a very simple wheel strategy can do wonders for your portfolio if you just remain disciplined, if you just make sure that you stick within some clear guidelines, if you choose good stocks, because obviously this can get really nasty if you choose a shit stock that goes negative 50% immediately after you sold the put. So guys, follow some clear patterns. Pick a stock that's either really good intrinsically or part of the Dow Jones, part of the S&P, to make sure that you get that investor amount of money from the whole investment banks, from everybody, basically all of the smart money behind your stock. If you want access, guys, to premium content and more of this, please make sure to support the channel by subscribing to Patreon. Please subscribe to the YouTube channel if you enjoy the content, and I'll catch you guys next time. Take care.